What's up, everyone? It's Caddy with Money Vesting. Welcome on board for another Market Open live stream here. And we do have the markets kind of gapping down a little bit. So we do have the QQQs down over 1%, almost 1.2% here pre-market. We've got SPY down almost 1% and the Dow Jones dropping also almost 1% with the 10-year yields pushing up to 3.9% here, crossing over 3.9%, and the volatility is up nicely, up over 5.7% or 22.4 on the day. So if you guys can see me and hear me, just give me a thumbs up. Just want to make sure the audio in the video is good. And hope you all had a really good long weekend. And we are ready for the markets here to see what the market has in store for us this week. So just give me a thumbs up if everything is working well, and we should be all set and ready to go here. So crude oil, kind of consolidating sideways at $77 per barrel. We are seeing Bitcoin also get rejected at around 24,600, 24,650 to be precise. Right now, we're just consolidating sideways, and Ethereum also at 1,700, getting a little bit of a rejection here inside this red rectangle. And of course, the markets here are pulling back quite a bit with the 10-year yields and the volatility rising, and the dollar index is also higher, just back over 104. So it should be an interesting week. We do have inflation numbers coming out later this week. That's going to be the PCE. That's the personal consumption expenditure. And then we've also got GDP coming out on Thursday, February 23rd. That's going to be for the fourth quarter 2022. And we've got a few of the Fed members talking. We've got earnings. Walmart and Home Depot already announced their numbers. Walmart's down 3%. Home Depot also is a lower pre-market. Home Depot is down almost 4%, and Walmart is down close to 3% at the moment right now. And of course, later today, we've got Coinbase, we got Palo Alto Networks, we got Realty Income Corporation, Public Storage, and of course, later this week, we got NVIDIA, Block, Alibaba, Fiverr, all these companies reporting. And this is going to be the consensus for GDP. 2.9% is going to be that estimate number for fourth quarter. And for PCE, it is expected to come in hot. So we're expected to go up month over month, 1.2%. And excluding some items, energy and food expected to go up 0.4%. And then consumer sentiment is also coming out later this week on February 24th. So that's where we are. And so let's see. What do you think about Walmart? Just released Q4 earnings, Thomas. So I did a video on Walmart, earlier before the numbers came out. I think a couple days ago, we talked about Walmart, and my fair value is a lot lower than where the company's trading at. It just doesn't really make sense for them to be trading at 24, 25 times earnings, when the earnings growth itself is going to be in the low teens and probably even in the high single digits, right? So when you're talking about such a low growth rate, it doesn't really make sense for them to be trading at such a high P multiple. And so, my fair value obviously is a lot lower, and we're talking like, I think 60s and 70s for Walmart's fair value, just considering the growth rate and the earnings multiple. So that being said, it's been a range bound pattern for the longest time. So if you take a look at the weekly chart, it's been mostly trading sideways. So it got up to its resistance of 149, sold up down to 122, resistance up to 149 again, got down to the support, get rejected here, support here. Again, you can kind of pretty much find out some touch points for Walmart. So the support really is going to be at 132 for the company right now, and all the way down to low 116, 115 levels. If and when it comes down to that level, I think that would be a very, very interesting level for Walmart and a very attractive price. Not from a fair value standpoint, but from a trading standpoint, I think that would be a very nice potential swing trading idea for Walmart. So, revenue looking good. Revenue still looks good for companies like Walmart. I mean, revenues is still going to be, in the hundreds of billions of dollars. I mean, Walmart in one quarter generates, more revenue than a lot of S&P 500 companies combined generated in a year. So this is definitely, one of the biggest companies in the world in terms of revenue generation. So they came in at $164 billion in revenue. That's insane. That's crazy how much money they bring in every single quarter, and $1.71 in earnings per share. But I think the valuation, once again, just doesn't justify Walmart at 24, 25 times earnings. Now, Home Depot, on the other hand, I think valuation's quite reasonable 330 EPS reported, so beat on EPS. Revenue came in a little bit shy of expectations. So if you take a look at the numbers here, we're trading at 19, closer to 20 times earnings, a little bit over 2 times sales, 24, 25 times cash flow, and enterprise value to EBITDA at under 14. So from a value perspective, I think Home Depot is a much better deal than Walmart. And of course, it's got a much higher dividend yield of 2.39%, whereas Walmart's only paying you 1.5%. So Home Depot is a stock that I will analyze. I will take a look at this company. I'll kind of break that down from a balance sheet standpoint, from cash flows, earnings, margins, all that stuff. But resistance is going to stay put at 334, and support level is going to stay put around 248 to 249. There might be another reasonable support around here at 265. So those right there are going to be some levels to watch, and we're going to be like inside this overall uptrend for Home Depot. So like for the longest time, I mean, it's been inside this this overall uptrend, making higher highs and higher lows, and it's just been consistently pushing higher. So that I think is going to be that level. Yeah. So it's going to be a little bit lower like that. Yep. So that's going to be the higher highs and higher lows, and those support levels kind of very much in line with around this confluence at around 240 to 265. So at those prices, Home Depot I think would be a phenomenal deal. So Damien says this market is going to rip this week. So Damien, would love to know what your thesis really is. Like, why are you expecting the markets to be higher, right? Why are you expecting the markets to rip? If any analysis can be shared, I would love that. But yes, I think, I did a couple videos talking about the valuation of the markets. We talked about the CAPE ratio. We talked about the Buffett indicator. We talked about the interest rates, the margin debt, and, just in general, where the markets are from a mean reversion standpoint. It is quite an interesting sort of environment where the market can't be like looking at certain metrics. You can kind of make a judgment that the markets are not really overvalued. And to somebody's point in the comment section that the market's not grossly overvalued, I agree. The market's not grossly overvalued, but it's also not to a level where it's undervalued, right? It's also not to a point where, I can personally justify buying at these levels because I think the markets are undervalued, because I don't. Right, so I would say the markets are more leaning towards fairly to slightly overvalued. That's, I think, where we are. A little bit more towards the overvalued side than we are to fairly valued. But, again, valuations are very subjective, but there are some written rules about the interest rates and inflation and PE multiples. And if you consider those numbers, then obviously the markets, need to be a lot lower in terms of the overall valuation. Let's see, more like the market are going to tank this week. Milan says, where do you think NVIDIA can go from technicals? Frankie's asking. So from a technical standpoint, and again, NVIDIA is reporting earnings tomorrow after the bell. So Wednesday after the close. And I'm actually very excited to learn what NVIDIA reports in terms of earnings. But if you take a look at their weekly candle, we have a clear resistance at 230, right? So NVIDIA has been consistently getting rejected at $230. We've gotten tagged at that level not once, but twice now. And if we do start to see a real pullback, which I think, considering the MACD crossing below that signal line, the RSI also rolling over, I think there is a high probability that NVIDIA pre-earnings and post-earnings starts to really see a pullback and a decline, and support really is going to be down to 190. So this right here is going to be that next level to watch, and this is where I could see NVIDIA come down to as a reasonable pullback area, which is going to be about an 8 to 9% drop for the company. And that's also where the 50 EMA would be at around 187, 182. Of course, 21 is going to be a lot closer, and 9 is going to be pretty much tagging along to the price. And right now we're starting to break down below that 9 EMA. That's another really interesting thing that we can kind of look at, is because if you see how NVIDIA has kind of trailed its 9 EMA, perfect rejection here, perfect rejection here, perfect rejection here. So when NVIDIA is trading below its 9 EMA, that 9 EMA consistently acts as a resistance. But when it's trading above that level, for example, we got a very nice breakout here, then it starts to act as a really good support until it finally breaks down. And then for a short period of time, it trades below that level and then finally gets a breakout here, has a huge rally. And right now we're seeing the 9 EMA above the price itself. So in other words, the price is starting to break down below the 9 EMA. So that in itself could also be a little bit of a technical breakdown for NVIDIA stock. So 190 is going to be the level to watch, at least in the near term. And then we'll see whether we get a further breakdown considering how high the valuations are for NVIDIA's here. So Damien says, how many times has it ripped on bad news? All this negativity in the media, and look at where we are, close to very strong support. bottom of the bull flag we've been forming, at least back to the top, as Damon saying. So, okay, if it's purely sentimental, then I think it's more of a prediction, right? So you're thinking that, okay, the market's going to do a little bit of a counter rally. Like, in other words, everybody's expecting the markets to go down, everybody's bearish, so the markets will do the opposite of what everyone's thinking, right? So that's what I'm getting the sense of what the analysis really is. So I do agree. I think we are coming down to certain support levels. So in other words, the S&P down to 4,000 is going to be a very good support in this uptrend. That's where the higher low really is. And the NASDAQ also seems to be forming a little bit of a bull flag, and we're coming down to a support at around 11,470. So to your point, I think I agree that the sentiment is really strong. In other words, we have seen the overall market kind of push up since January and even since October. Markets have really not cared about any negativity, any bad news or anything that would have put the markets down in 2022. Instead, it's kind of just fueled this rally even to the upside. But I think eventually reality will set in. Sentiment can only go so far, but eventually somebody's going to pull the trigger in taking some profits, and that could really create this wave of potential selling. Obviously, we don't know, but I do think that the valuation is just a little bit on a more higher end, a little bit more stretched. And valuation is something that we can quantify, right? Sentiment, not so much. We can understand how sentiment is doing, but we can't really quantify to a point where, okay, where is it now, where it should be, versus valuation. We can actually look at the numbers, we can quantify it. Okay, this is the current valuation of the aggregate market, but is it a little bit higher, lower, fairly valued? We can kind of draw some conclusions from that. Meta here is on fire, still on fire. Yeah, Meta is up pre-market. It's one of the few stocks that is pushing higher. So I did a video over the weekend talking about the new social media era, and Meta here joining the club of Twitter and YouTube and Discord and charging for the subscription. Now, it was a little bit different, right? So we talked about it. We mentioned how Meta charging $11.99 or $14.99 depending on where they're launching, whether it's the Australia, New Zealand. That's what they're going to roll out with, at least in the beginning. It seems a little bit more content creator oriented as opposed to just the average user oriented. Because if you're subscribed to YouTube Premium, right, what is the number one benefit that you're getting to subscribing to YouTube Premium, right? Why do people subscribe to YouTube Premium? What is the number one benefit? And I'm sure, like, if I ask you guys, almost everybody will say that one thing, right? And that is going to be, let me just ask you guys, right? What is the one thing that people subscribe YouTube Premium for? No ads, right? Srinivas got it in the first thing. Kevin also got it. No ads, right? No ads, and you can watch all the content, unlimited videos for without any ads, and just you have to pay that subscription. But with Meta, they kind of did it strategically. They mentioned, 3 perks, right? Increased visibility, no impersonators, and better access to support services, but they didn't mention any ads, right? So to me, those are perks that a content creator would really seek out, right? So if you want increased visibility on the platforms, right? As a content creator, you would want that. You want less people impersonating you. Again, as a content creator, you need that, and you need better access to support services. As a content creator, you need that. But does the average user need those things? Not really, right? I mean, they can continue to use the service as they normally would, but they don't really need those things. So it was more content creator oriented, in my opinion. It was just branded differently, Meta verified. But I think to me, the perks themselves kind of really tell us, okay, this is more for content creators. Had they put in no ads, then it would have been of great use to the user. But yeah, Cliff says I'm using YouTube Premium and the no ad feature is great. So again, had they just put in no ads, then obviously the conversion rate will be much higher. In other words, 2 billion daily active users, maybe we see 2.5% conversion rate where, lots of people join Meta verified and in hopes of not seeing any ads anymore. But of course, advertising revenue is going to offset that. So if fewer ads are being shown, then advertising revenue gets affected for Meta. But they make that up by subscription fees. It's kind of like a give and take, right? With this, ads are going to continue and they're going to just, have this extra revenue stream, which is not going to be pretty substantial right now. It's only going to be like, we did the math. It's going to be closer to like $200 million per year, which is, in Meta terms, really not that much when the company is doing $120 billion in revenue. So it's a very, very tiny portion of what they're actually looking to achieve here. But eventually, you never know, it can evolve into something bigger. So let's see. Google, YouTube will be next. Matt is saying so. YouTube already has that feature, Matt. They're already doing that. So with Walmart, is there a best valuation metric? Maybe PE isn't the right metric. They report 30% advertising growth. So Tristan, so advertising growth, we have to also understand what percentage of their entire revenue is coming from advertising, right? So for example, Amazon, if you take a look at AWS, right, 18 to 20% comes from AWS. Don't quote me on that number, but I'm pretty sure it's in the mid-teens. And that's a pretty substantial number, right? If you simply just take Amazon's valuation on AWS, that alone, in my opinion, should be worth at least $600-700 billion. Whereas for Walmart, I doubt that the $164 billion, a lot of it is coming from advertising. Sure, that is a part of their revenue stream, that is a part of their business that's growing pretty substantially, and that can evolve into something much bigger than what it is now. But right now at $162 billion in revenue, what percentage of that is advertising, right? Because advertising is going to be a much higher business, much higher margin business. So in other words, they can generate a lot more profitability in advertising as they can versus what they can with groceries and retail and merchandise. So even when it evolves into something bigger, then I think the P multiples are justified. But right now, I think 24, 25 times, times earnings is a little bit too much for me personally. So, all right, let's see here. Yeah, both are advertising giants, both are cloud giants. Instrument is asking about, whether Google or Amazon, which one of those is going to be a better buy. Amazon obviously has a lead in cloud, AWS. Google is the leader in advertising, but they're both crossing over now. So they're kind of going after each other's market, right? So Google Cloud, even though it kind of ranks AWS, Azure, Google Cloud, Google Cloud is pretty much the third, but they are certainly kind of focused on that part of the business as well in order to compete with Microsoft and Amazon. And then Amazon, one of the reasons why I first originally invested in Amazon to begin with was advertising. Believe me, it was never e-commerce. It was also never AWS. It was advertising. Because if you guys go back and watch the video that I did like a couple of years ago on Amazon, I specifically talked about how Amazon's advertising is going to be much better than that of Google and Meta platforms. The reason is because if you're going to Amazon, you're already going in with the mindset of buying something, right? You're already going there on Amazon.com for shopping, for e-commerce, right? So if you're seeing ads for products that you may want to buy, the conversion rate is going to be much higher. Whereas if you're going to YouTube, if you're going to Meta platforms, like any of the platforms, you're going to social media, you're not there to buy anything. You're there to consume content, right? You're there to watch something, consume content, a video, whatever it is, a post. So you're less likely to kind of be, redirected into buying something. So that was my thesis into Amazon, was like, I think their advertising business is in the very, very early stages and it can really become something huge. And their advertising growth has been phenomenal for Amazon. So longer term, I think in the intermediate term, I think Google is a much better value. But I think Amazon over the longer term has a lot more growth levers to pull and something that they can eventually translate over to the bottom line in terms of profitability and can really, become like a really high margin business with AWS and advertising. Of course, e-commerce is still going to be a big part of their business. That's really how they generate majority of their revenue. But over time, I think they're really looking forward to kind of killing the competition and then being able to really make a ton of money through Prime and then their logistics networks and all the other services that they offer as well, right? Prime Video, music, all that stuff. So anyway, we got about a minute left, 30 seconds left, by the way, for the markets to open. The markets are still selling off quite a bit. We got the S&P, the Dow, and the NASDAQ all selling off at least 1%, if not more than 1%. The 10-year yields, this is on the move. Don't sleep on this because the 10-year yields definitely are causing more pressure, or they're putting a lot of pressure on the equity markets right now because remember, as 10-year yields go up, cost of borrowing goes up. Present value of all future cash flows are worth less because this is the risk-free rate that a lot of people use in their discounted cash flow models. So unfortunately, the higher it goes, the lower the valuations will be for tech, for especially growth. So anyway, the markets are open. The poll is not a surprise, 74%. Expecting the markets to be red today and 19% green with about 6% flat. And yes, thank you for the Palo Alto Network info. Yes, so we'll talk about Palo Alto Networks as well. It is a company that's definitely on my radar. I'm actually excited to buy that but at a much better price, at much better valuation, so to speak. So hopefully I can get a cybersecurity stock in my portfolio for once, because I've never had any cybersecurity companies. I wanted to buy CrowdStrike, wanted to buy Fortinet. Fortinet's definitely going to be at the top of the radar there, top of the list, but it's doesn't want to come down to our fair value. It is pulling back here a little bit. So Nvidia getting bought up right now, so we're seeing some buyers to step in, but Apple here down 1.3%. Green candle coming in, with Tesla down about 1.7%, so a little bit over 204. We got Google here down 2%, and Microsoft also down 1.46%. Microsoft's Bing AI search or chat is already available to a select few people. And of course, I'm sure you guys have already heard of it, how weird Bing AI is starting to get if you continue talking to the chatbot for long periods of time. And I've kind of seen some screenshots, and it's actually really weird. How dark it gets, how quickly. So Bing, Microsoft over the weekend, I think, also paused those beta testing, and I think they limited the responses to a certain amount, because it was just getting a little scary to begin with. But anyway, Tesla down. We got Apple here also pulling back. Google not really doing too well. Among all big tech, large cap right now, Meta's the only one that's up close to 1%. Everything else is down at least 1%, if not 2%. And then we got JD.com down over 11. DocuSign, Marathon, Spotify, Alibaba ahead of earnings. Shopify, Teladoc, all of them selling off. With only UVXY that is green on the day because volatility is higher, up over 5%. However, we're seeing some buyers stepping in right now. QQQ's almost right at support at under 297.50 at the moment. So big spike on Tesla here, with lots of buyers stepping in, back over $205. So, Caddy, what price you will be loading the boat with Palo Alto Networks? So again, if you haven't checked out the video on Palo Alto Networks, I would highly encourage you to do that. I pretty much go over my fair value, and when it comes to load the boat type situation, you can take that intrinsic value, maybe shave off another 20-30% from those levels. And if it's like deeply undervalued, then I would absolutely just go crazy over that stock. For CrowdStrike, it's a little bit different because, they're not really profitable just yet. And I think the price to sales multiple for CrowdStrike is a lot higher than that of Palo Alto Network. So I think Palo Alto Network offers better value, better balance sheet, little to no dilution, and it's turning the corner towards profitability. So that's definitely going to be on my list next to Fortinet. Fortinet, we've already talked about it, low 40s. I think is going to be closer for me to that level. Anonymous says, you would do great on the NASDAQ board shouting the quotes. I don't know if that's a compliment or not, but I'll take it. Thank you. I appreciate that. And, just trying to make it exciting for you guys and see where the opportunities really are. I mean, AMC is on the move right now. Again, UVXY is the only one that's actually pushing higher on the volatility, but most stocks are gapping down and, of course, starting the day off on the wrong foot, but we'll see if the buyers step in. We have really seen, the markets kind of gap down over the last couple of weeks, but buyers have been strong enough to keep the markets flat and afloat. The last couple of weeks have been a little bit more, weak from the markets, I should say. So if you come over to the NASDAQ, we've seen 5 consistent weeks of green. And then starting a couple of weeks ago, we started to see the momentum kind of fade away. And, we saw a week down 2.4%. Last week, we were very, very flat. CPI numbers came out, PPI numbers came out. And, that kind of set the tone for the week and gave us a little bit of a reality check. And right now, this week, shorter week, we're starting off with a bit of a gap down. So we'll see if this rally comes to an end or if we start trading sideways a little bit. Okay, it's a compliment. What a show on live stream, Caddy. Thank you. Appreciate that. So, Chente says Caddy doesn't YOLO into stocks. I don't really. Maybe with like 1 to 2% of my portfolio, but I really don't ever, go into like, all in into any stock with the entire portfolio there. Thank you, Chris. I really appreciate it. And thanks for calling me Scotty. People have actually started calling me Scotty. You won't believe it. Even on Discord, a lot of our members is calling me Scotty. That's funny. ChatGPT equals Skynet Terminator. Yeah, he waits for the coupons for his stocks. Yes, I've already shared a huge strategy with everyone. So if you go over to the memes channel, you can find my secret strategy where I apply to almost every time I'm actually trying to buy stocks. And that is literally just looking for coupons, online coupons, whatever it is, just referral coupons, wherever you can find coupons, you are. And that feeling of actually being able to, apply a coupon and get it at a discount is just something else, right? It's a completely different feeling. You just can't compare. So that's always a good one. All right, so we're seeing some buyers step in on the Nasdaq. The 10-year yields are still pushing higher, 3.9%, and I can tell you, this is a very, very strong market in terms of the sentiment overall, because the 10-year yields, if you break down this chart, we're pretty much coming back up to the same level where we were. We're actually way past December levels, and we're coming up to levels that we haven't seen since November of 22. And again, October, November is when this rally really started. So we talked about the counter trend rally in the Nasdaq with respect to the 10-year yields and the dollar index. So as the 10-year yields and dollar index started rolling over, as it started pulling back, we saw the markets kind of push higher. But now we're seeing these things push up. So 10-year yields and the dollar index push higher, and yet the Nasdaq keeps pushing higher. So this is a very, very strong market, so to speak. We're really seeing a lot of buyers, very excited to buy stocks, even at the slightest of reds. Yeah, this is a strong market. I remember the days we would open 2% down and flush the whole day to close minus 4%. And that's not even, that's very true. That's completely based on sentiment. Well, what's even more interesting, and, we talked about the sentiment in my other video, right? When I basically broke down the first 34 days of trading. Let me see who remembers it. Let me see who actually can come up with that exact percentage. So in 2023, in the first 34 days, what percentage did we see candles being red, right? From open to close being red. What was that percentage? Does anybody remember what that percentage was? Let me see. So Timothy is saying 65.3%, Left saying 87, Sanju is saying 56. I'm talking about the red candles, right? So 2023, in the first 34 days, what percentage of those days we've seen, red candles from open to close? Yeah, 65.3% green. So yes, Timothy, you're right. So the opposite of that, 32%. Yep, so Damien says 34%. You're absolutely right. 34% was the only. So in other words, in the first 34 days, only a third of those candles we've seen red. And what does that mean? I'm not talking about red day or green day. I'm talking about the candle's color. And that is completely different than what the day actually ends up being, right? We could end up having a green day but a red candle, and vice versa, right? Red day and a green candle. The candle color tells us a lot more about sentiment, right? And if it's a red candle, that means we closed at a lower price than where we opened. And in first 34 days in 2023, we've only seen that 32 to 33% of the times. In other words, more than 60% of the times, we've seen the markets push up in a green candle. Every time we've closed at a higher price than where we've opened. And if you compare that to same time last year, in January and February of 2022, it's night and day. Same time last year, it was way over 50%. 54%, I think, was that number. More than half the times, the markets closed red, closed down, right? Closed at a much lower price than where we opened. So just goes to show how strong the sentiment really is, and regardless of what we're really seeing in the economy, right? Inflation numbers are coming out, and they're not. Of course, the numbers that we got in January were very, very good. So celebrations were in order, but the February numbers were kind of okay, right? Not super great, but definitely not terrible either. We did decline year over year, but month over month, we definitely got some hot reads. And yet the markets still managed to stay flat. So very, very strong sentiment from the markets. And we got Tesla here, now almost flat on the day. Microsoft is still trying to push higher. We got Apple trading sideways, Google trading sideways. And a lot of the momentum is really coming from Tesla. We got Nvidia here now positive on the day after being down almost 2% pre-market. So a pretty good green candle forming here, back up to 214. So again, we'll see what type of earnings they report tomorrow. Yeah, so Kevin, how many back-to-back red years have there been? It's very rare. You're right. It is very rare. There's not been that many years. I have to go back and kind of put together that analysis for you, but it is very rare. You're right. It is not that often occurrence for us to see two back-to-back red days, especially during a midterm election year, right? I mean, last year when we had the midterm elections, there was a lot of analysis being drawn that 1 year after the midterm elections, considering the markets are down, we see 1 year return forward returns to be over 15 to 20%, and if you kind of go along with that type of analysis, we're already up. For the Nasdaq, we're already up on a year-to-date basis, close to over 10.4%. We might even be a little bit higher. So January, let's see here, January 3rd, December 30th, we're up a little bit over 13% already. We were up close to 19% at one point, but of course we've pulled back a little bit. But you're right, it is a rare occurrence for the markets to be down 2 consecutive years. Nvidia pushing up to be green. What a strong market. Totally agree. I may have missed it in your video, but when you consider Palo Alto Networks, you look at the CEO compensation packages. So overall, that's already going to be accounted for in the operating expenses, right? So in terms of the stock-based compensation, right? So that's already going to be a part of the operating expenses. And if they're going to be planning to become profitable on a GAAP basis, that's already accounted for. And their non-GAAP earnings per share, once you kind of add back some of these non-cash expenses, is going to be closer to 350, which, if you do the math here for Palo Alto Network trading at 168, right? 168 divided by 350, they'd be trading at around 48 times earnings. But they're also going to be growing earnings, in the mid 30%. So the PEG ratio is slightly above 1 for this company. So I would be careful with that valuation there a little bit. And of course, the RSI, MACD, not to mention just, extremely a little bit on the overbought side, which is why my fair value is obviously a lot lower than where it's trading right now. So yes, to long answer short, yes, we do take into that account. Not directly talking about it, but indirectly, we look at the stock-based compensation, we look at operating expenses, and we look at the share dilution as well from Palo Alto Network. Meta is up almost 3% today, so seeing a lot of momentum here. It came down, didn't quite fill the entire gap, but we're seeing a little bit of momentum back up, and 183 is going to be that resistance to watch for Meta Platforms moving forward here. QQQ has just been on this very nice, consistent string of green candles after green candles. For us to fill the gap, we definitely need to get up to over $301 for the Nasdaq. And that means another 67, 70 basis points gain for the QQQs, but we'll need a lot of momentum from Google and Apple and Microsoft for that to happen. Tesla started the fire. Yes, so Caddy Crowd may not be profitable, but check out the number of new customers that they are getting every quarter. It is remarkable. Yes. So again, for every company, when you are executing, there's always a give and take, right? You're always going to be getting something and you're always going to be giving away something, right? For companies, what I mean by that is if they're going to be spending a ton on marketing, right? Marketing, sales and marketing, of course, their growth is going to be much higher, right? They're going to acquire a lot of customers. They're going to acquire a lot of users and revenue is going to grow. But at the same time, their operating expenses are growing as well. The best thing, and that brings us to operating leverage, is if the operating expenses are growing, so there's nothing wrong with companies spending on sales and marketing and general administrative expenses, wages. They need to pay people, employees, but their revenue is growing at a much higher rate than their expenses, and that is the sign of an efficient organization and the fact that they're able to kind of pull in some of that operating leverage. And eventually that is a sign that, okay, they can turn the corner and become profitable. But if the company's operating expenses is growing at a much faster rate than the revenue, that means that they're not able to efficiently allocate capital and their sales and marketing efforts are not yielding the best return, so to speak. So if and when, CrowdStrike decides to pull back on operating expenses, because most companies can become profitable tomorrow, like if they wanted to, right? Shopify, Teladoc, Roku, like a lot of these companies that are spending so much on operating expenses, they can become profitable. But is that going to be sustainable though, right? Because they're going to pull back on all that spend, and is that going to hurt their revenue or not? So that's the real question. Can they sustain revenue despite lowering some of their operating expenses? That's the real question. And if most companies are not able to do that, but the companies that are and can do that. So for example, Tesla, right? Tesla has such a lean business. It is remarkable how lean their business really is. And they have little to no spend on marketing. Like they don't even have a marketing team, right? So that's phenomenal, right? So very, very efficient. They can continue to increase revenue and demand just based on word of mouth, just based on, how cool and just great their vehicles are. And if and when, of course, if they end up with a marketing department, they actually start aggressively selling and marketing. But then, of course, their revenue will also jump accordingly. So, all right, SGML. Let's take a look here. So anime, did I do it or not? So I haven't yet because unfortunately my cost base is still a little bit higher on Meta. I looked at it the other day. It got up to as much as 197. So like anything over $200, I think will bring me a lot closer, and I can start looking at selling covered calls, because one of the reasons why, one of the rules of selling covered calls is to make sure that your strikes are above your cost bases. And unfortunately right now, even if I can go farther out in expirations, the cost basis is actually a lot higher. So my strikes, the premiums are not going to make sense for me. Premiums are going to be a lot lower. So a little bit more room, a little bit more upside here for Meta. It gets up to over $200, and I will be all in selling covered calls to kind of hedge on the downside. Anyway, let's take a look at SGML. I don't know what that stock is, Kevin, but I'm trusting you. Sigma Lithium Corporation. So yes, I think you mentioned this one. There's been some rumors that Tesla is weighing takeover bid for Sigma Lithium. So Tesla has spoken to potential advisors about a bid for the battery metals miner, although no firm decision has been made, according to the report. And Sigma Lithium is one of the several mining options Tesla is exploring and is considering its own refining. So that's obviously a really interesting catalyst for the company. The market cap's only $3.5 billion. Tesla's got the cash for it. And it's up another 14-15% on just these rumors alone. But of course, nothing's been finalized. So this right here is the overall trend lower highs. Right now we're kind of tagging along to that level, and we've got a big gap on the downside here that, Sigma might need to come down, kind of fill in until anything is, firm, concrete. And if there is, we'll kind of learn more about the price at which they're looking to acquire Sigma Lithium, because if they are not, then this stock is going to absolutely plummet down back to low 30s, possibly even under 30s, and kind of fill this gap entirely. But I think all we can do is just really wait and see how this all plays out, and which company Tesla is really considering about buying. So SQM is great as they are a Chile company with cheap labor and the biggest lithium reserves. So yep, that could also be an option for Tesla. 23 billion though, Oleg. I don't think Tesla's going to be able to explore that. Maybe they buy a part of the company, but 23 billion is already a pretty expensive company to begin with, and Tesla certainly, may not have the cash or the financing available to do it. They're a pretty big company in themselves, but 23 billion is still a pretty big acquisition, right? Microsoft couldn't even get the Activision Blizzard acquisition through. And it's just been trading sideways ever since. Let's see, Microsoft has signed Nintendo deal. Yeah, so Activision is about a $60 billion business, and but yeah, I think for a much smaller part of the business, this might also be worth Tesla's time. Anyway, so markets here, we're seeing lots of buyers step in. However, we are seeing a bit of a pullback now. All in all, we're still lower. We've got NASDAQ down 1%, S&P down 1%, of the Dow really plummeting here to 381 points, down over 1%. Let's just quickly run through the watch list here. Advertising, Meta leading the way. Pinterest flat, and PubMatic, APPS, Roku, they're all down 2, 3, 4%. ARK Invest is selling off quite a bit. However, they are up quite a bit year to date. Banks, we've got most banks down, except for HSBC that's pushing higher, 5%. Sberbank also pushing up 2.5%. Let's see, energy here. And energy is very flat. Oil prices is consolidating sideways. Electric vehicles, we've got Lucid down over almost 5%. Blink, Rivian down 3% each. Nikola, ChargePoint. Isn't Nikola also reporting earnings sometime this week? They are. Okay, so they are on Thursday before the markets open. Then we got Ford, Volkswagen. All right, there we go. We're starting to see the Nasdaq kind of really pull back on the back of Apple and Microsoft here. Google's just trading sideways, but Tesla's also rolling over. QQQ coming back down to that support at 297.37. So Coinbase, Matthew, they are reporting earnings after the bell. As we've already discussed for Coinbase, I think crypto analysis is a must because, it pretty much trades off of where Bitcoin goes. Ethereum right now, 1700 big resistance, and we got Ethereum and 1700 resistance. Bitcoin here, a little bit at 25,000. So we're getting a bit of a rejection there. But, if Bitcoin goes up, Coinbase goes up, but $85 is going to be that resistance level to watch. And if you notice, the last quarter, crypto's actually done well. So they're going to be reporting for, I believe, let's see, they are reporting for, so period ending in December, estimated EPS negative $2.54, but EPS, but revenue estimate, $587 million. So in the fourth quarter of 2022, we've seen crypto pretty much, crypto is down 12%. So, when crypto is down, obviously when Bitcoin's down 12%, Coinbase's earnings also get affected, revenue gets affected because it's just, when prices are selling off, there's less volume, there's less trades happening versus when, Bitcoin's pushing higher. So in 2021, 2020, when crypto prices took off, Coinbase reported some staggering numbers, just insane numbers because the volumes were much higher, trades were much higher. But in fourth quarter, since it was only down 12%, I don't see a big impact on Coinbase's volume. Excuse me. But I think it's definitely going to be a small impact. And revenue-wise, $587 million, but obviously no earnings, negative earnings. So QQQ kind of validating that support really nicely. 297.37 kind of came down to that support here. Buyers stepping in. We're getting a bounce here back up to that 9 EMA and that middle VWAP. And once again, we're seeing some momentum on the back of Apple, Google, and Microsoft. Oleg says, Nikola reporting not earnings, but bankruptcy. Coin has no earnings. Volatility though, I'm still thinking about that person who's bet over $5 million for the VIX to be at 50 by May. Imagine if it gets up to that level. That's like another 100% move to the upside. That'd be crazy. Those call options would be up like so much if it ends up at 50 or higher. So once again, we're seeing a lot of large cap tech red. Amazon's leading the way here, down 2%. Netflix 1.7%. Tattooed Chef 4.5%. I really gotta try Tattooed Chef before the big day. Before the big day happens. Maybe this summer. I'm definitely gonna try Tattooed Chef, no doubt. I'm definitely trying it this summer. So let me know what's the best they've got. Is it like a pizza? Is it like a bowl? I don't even know, but let me know what's the best thing ever you can try for Tattooed Chef. I'm really curious. Milan says the stock of the food. The food is what we're talking about. First we try the food and then we reanalyze it, revisit it, and look at it again. Okay, plant-based burrito bowl is great. I'll try that. More like a pizza or the plant-based burrito bowl. So either of those two I'll definitely try. So Alibaba reporting earnings on Thursday. 240 is going to be that EPS estimate, and $35.6 billion in revenue. But right now, obviously coming down from that resistance, so 120. Support level is going to stay put around 85, 86 right now. And it does kind of feel a little bit more like a inverse head and shoulders for Alibaba. Like this is a big neckline. You can kind of see this as a left shoulder, a huge head, and then we got a potential right shoulder forming now, where if and when it comes down to that support, bounces off at that level, pushes back again, we'll have the neckline waiting for us at 120, and then a potential breakout past $120. Donald says McDonald's cheeseburgers are the best. Come on, man. Get out of here. McDonald's, seriously? Such really... Yeah, make sure that you hit the like button. Thank you so much for that. I really appreciate it. Five Guys has the best burgers. I agree. I think Five Guys is really good, but it's super expensive, isn't it? Like you compare Five Guys to In-N-Out, it's like night and day. Like they do have pretty good cheeseburgers, but man, they're expensive. I can't even imagine what the prices are now. Like after what we've seen in the last. Well, I was there back in October, so like it was still pretty expensive, but crazy. Like that's like once in a year type of deal for me. So Nima, any news this morning? So nope, we're pretty dry on the economic calendar. We don't have a lot of things scheduled until after Wednesday, Thursday is the big day. So we've got FOMC minutes coming out at 2 p.m. Eastern tomorrow. That's going to be important. Then we got GDP numbers and jobless claims, and we've got Loretta Mester talking, consumer sentiment, and personal consumption expenditure scheduled for Friday. So, and of course, when it comes to earnings wise, Home Depot and Walmart reported. We already broke that down. And after the bell today, we've got Coinbase. And then we've also got Palo Alto Network. Milan says, yeah, Neo, we're talking about burgers. I really don't wanna feel hungry right now, so we gotta really change the topic. Because otherwise I'll just like gonna have to go and just make something. So can't be talking about this right now. Yeah, splurge once in a while, and get a good burger. Yeah, that's once in a year type deal for me, Kevin, for sure. So Anshuman, no, I'm not invested in restaurant chains. I was looking at that. I was actually thinking about that today. Does anybody know there's one restaurant chain franchise which is really popular, really successful? I don't know like the exact details or financials. I think they're profitable, but they just never went public. Can anybody guess which company am I talking about? And it'll be like a company that you may have eaten at. Definitely a fast food chain that you've eaten at, and I'm sure you loved it. Shake Shack, nope. Roadhouse, nope. White Castle, no. White Castle's not even that good. But Chick-fil-A, Damien got it. Chick-fil-A. Chick-fil-A is a really successful business. As a franchise, they're really successful. Really, really well managed and organized. But they just never went public. If they ever decide to, I mean, I would love to analyze their company, their stock. Yeah, they're control freaks. That's true. That's also what I've heard. Chick-fil-A definitely are control freaks because they really want you to like if you're running their franchise. Because I looked into it. If you're running their franchise, they want you to only do that. They don't want you to have another job, and you can't just hand it over to somebody else as a manager. Like you have to literally spend your time, your resources, your effort in running it. It's almost as if like you care about the business and you have to like do it yourself. So they really, really want that. So, which is both like a good and a bad thing, but that's how they run it. Yeah, I heard they just came out with a cauliflower burger. Kevin, you were supposed to send me some Chick-fil-A sauce, man. What happened? No, I'm just kidding. I'm just kidding. I heard that they started making it like in bottles and started selling in Target and stuff, which is pretty cool. I think everybody can benefit from that. Their sauce is just absolutely amazing. Anyway, changing topic because I'm getting hungrier here. We've got markets still pulling back, still down, gapping lower, with Tesla stock down now in the red 1.4%, Apple down 1.4, Microsoft down 1.5, Google down 1.5. So pretty much all big tech large caps down except for Meta that's still up close to 90 basis points. Volatility is still higher. It's actually pushed up to a new high of day right now as we speak, 22.64, up over 6.5%. So definitely on the move here with U.S. oil currently just trading under $77 per barrel right now. So, Marla, Caddy, if I may, how did you learn to analyze companies? So, Marla, I went to school for finance, got my degree in finance, so that's pretty much what they teach you. Took a lot of courses in fundamental analysis and financial statements analysis, valuations, and all that stuff, and it was exciting stuff. I really miss it. I actually I liked going to classes, to be honest. Like, it was weird, especially for finance stuff. It was kind of fun. Everything else, not so much, but for finance, definitely loved it. Learning about, just financial statements and company analysis and valuations and all that stuff. Anyway, so thank you so much for joining in. I really appreciate it. That's going to be it for today, but the markets here not starting us off on the week on the strongest foot, but this is something that we obviously talked about over the weekend. We knew the markets were a little bit overstretched from a technical standpoint, from a valuation standpoint. We're a little bit on the overextended side as well. So we'll kind of see how the week plays out. We still have a lot of economic reports coming out later this week, so that should be super exciting. Don't forget, we do have the giveaway by the end of this month. So all you have to do to enter that giveaway for the bundle, which is the fundamental and technical analysis courses, is to follow on Instagram and connect with us on Twitter. So if you are connected on both places, I'll kind of create that list, and one lucky winner will do like a giveaway for them at the end of this month. So thank you so much for joining in. I really appreciate it. As always, make sure that you drop a like, subscribe, and the links to our Patreon Discord is going to be down below. Happy investing, and I'll see you all in the next live.